What a day for the stock market, ladies and gentlemen. Unbelievable day from being down a ton to up a ton at the close. We got to break down everything in this video from the S&P 500, the NASDAQ, and of course, a bunch of stocks that I'm looking at. So sit back, relax, take a sip of your water, and let's dive into the video, guys. And if you all find value, hit that like button. Feel free to subscribe as well, and let's talk. So we saw the NASDAQ 100 close up 2.3%, Russell up 2.4%, S&P up 2.6% as the Dow closed up the most, up 2.8% as the VIX is starting to fall, guys. It closed down 4.5%. And let's pull that up quickly before we look at silver. Look at the VIX, guys. It's been peaking. Well, I don't want to say for sure peaking, but it's been struggling to break out of 35. You guys can see, ever since the 10th of this month, which was just a couple days ago, but really throughout the course of this week, 1, 2, 3, 4 days, VIX has not gotten above 34, 35. That's worth noting and looking at and being aware of, because you all can see on the 4-hour chart, the VIX really over the past couple of months has also failed to break out of 35, 37. So keep that in mind here moving forward. And the metals, let's see the metals here. Gold went down 0.4%, silver down 0.6%, and last I checked, Bitcoin and Ethereum, those were ripping. We'll talk about those here in a couple of minutes, so make sure you guys stick on throughout the video. So yeah, looks like everything went up today except for the metals. We had the S&P down, NASDAQ, Russell, everything went up. Bitcoin, Ethereum, except for the metals. So let's break down what I'm seeing here. Is this a legitimate rally, guys, or are we going to get more selling pressure? And the reality is we are still at a point where, like I said in my last video, we could be getting more selling pressure. This trend right here does not look like it's reversing, at least to me, to the upside. Call me crazy, but I think the bears are still 100% in charge. And think about it. Think about it, guys. I mean, why did the markets run today? There really was no reason as to why the markets ran today. We got worse than expected inflation, which shocked the markets initially, as you guys can see on the intraday chart here. SPY dumped aggressively pre-market. But I feel like there was so much I feel like there was a lot of pessimism heading into this report, and the market just needed to see some rally. I mean, I can't even put my finger on why this ended up happening, to be honest. But we got that shock sell-off and just a bounce, quick V-shaped recovery type of reaction, a quick reaction to that sell-off, and really it was just a lot of volatility throughout the day. Very, very sharp swings. And again, if you're looking at this fundamentally, at least I'm looking at it, I'm like, there's no reason for the market to really be running at this point. But who knows? I mean, that doesn't mean that it's not going to continue to run. The truth is the market does what the market wants to do. I mean, sometimes it does things that doesn't make sense. It might continue rallying here, even though we got higher than expected inflation for the month of September. And we're not getting the confirmation yet, technically, but if this starts taking out 375, 380, which was that high from earlier this month, maybe that would be a sign technically that SPY, this rally in the short term, could continue. But as of now, we're still under the 180 SMA. We're under the highs from last week. Be very, very careful here in these markets, guys. And Triple Q, same thing, right? We're rallying. Great day overall. 2.5% green day. A lot of tech stocks crushed it today. Very sharp V-shaped recovery to the upside, but we're still under the moving averages, guys. Well, at least the 180 SMA here on the 4-hour, and we're still in this downtrend. So to me, there's going to be some selling pressure here. And tomorrow being Friday, who knows? That could be the day that we might be getting maybe just consolidation, and I'm cool with that. I mean, let's have a day or two or a couple of days where we're flat. I mean, come on. The markets, I feel like, have always been, either swinging up or down crazily. So if we have a flat day tomorrow, that'd be a sign that we're starting to get a little bit of resistance at this point. But who knows? We might not have a flat day. Time will tell. We might even rip tomorrow. So, continue this breakout. So what do you guys think? Let me know your thoughts in the comments. I mean, at this point, again, you got to be careful at where we are right now here in the markets. And SPY, or not SPY, I'm talking about crypto here. I'm my mind's somewhere, but my, computer is moving to the other thing, which is Webull here. Anyway, crypto is also starting to move very aggressively. It's been moving very aggressively these past couple of hours. You guys can see Bitcoin is at 19.4 right now. It was at, what was it at earlier? I think 18.2. So this thing is up $1,200 per coin intraday. I think it was down at 1.45%. Now it's up 1.3% roughly. So very sharp snapback here in BTC, and that goes to show how strong of a resistance 18,000 is for this crypto. Because look, guys, I've mentioned this before, but I'll say it again: 19,000 roughly. That was the all-time high in 2017. That is where we continue to get buying pressure. That's been the support for the past 3-4 months here on Bitcoin. And you guys know, if you've been watching the channel, if you've been tracking it yourselves, you know exactly what I'm talking about, right? We hit 17.5 in the middle of June. Now we're in the middle of October, 4 months later, and we're still in this consolidation range, at about 18, 19, 20,000. And with today's buying pressure up towards the mid-19s, well, guys, we are still consolidating. That's what that pretty much means. We didn't dump under 17.5. We didn't rip out of 25,000 yet, or 23,000, but we're still in this little channel. And same thing here with Ethereum, or at least last I checked. Let's pull it up here and double check it. Ethereum, let's see what that's at. It's down 0.2% on the day. It's back towards 1,300 a coin. It's at 1,290 right now. And earlier in the day, if I pull this 5-minute chart up, let's see if we can see it on here. Yeah, earlier in the day, it got all the way to 1,190. So it broke under 1,200, but now it's back almost to 1,300. So this intraday move is pretty substantial, and it's gotten Ethereum back to a point where it's at break even. And if I pull up the 1-hour chart, still clearly consolidating. You guys see that. The fact that buying pressure came in and got this thing back over 1,250, now towards 1,300, like I said, that's very good for the bulls. We're getting that consolidation. And like Bitcoin, this thing has been flat for quite some time, a couple of weeks here. And, we got to wait for that direction. And we do have a head and shoulders. Keep that in mind here on the 4-hour. And if we do break 1,200, 1,150, it's going to start getting ugly. So what do you guys think about crypto? Let me know in the comments. As always, I'd love to know. And if you guys want 12 free stocks from this platform right here, Webull, I use it for crypto, Ethereum, Bitcoin. Use those links down below. Well, you could get 15 stocks from Moomoo, but 12 stocks from this platform right here, Webull, with any amount deposited. Free money, link down below, guys, and just know all those links help out the channel, full disclosure. So with that being said, let's get back to the charts on ThinkOrSwim and see what's going on here with some individual names. So Netflix crushed it today. A lot of the semiconductor plays did well as well. Let's start here with Netflix. Went up 5.3%. We got clear buying pressure at 215, and just like that, Netflix is back at 230. Look at that. 5% green day today, guys. Unreal. So we were calling this out a couple of videos ago. The fact that it was at 215, 210, which has been support since the end of July, that was a reason to watch it. Buying pressure came in yet again, and now we're right by these moving averages. And actually, now that I'm looking at it, Netflix actually took the moving averages out. We broke above 230. We closed above, we actually closed above 232, and now it looks like it wants to start, or rather continue to the top of this channel, which I'm thinking is anywhere from 245 to about 250. That's what at least what I'm seeing here on this 4-hour chart. So we have Netflix looking very good here. Earnings coming up here on the 18th, which is next week, I think on Monday, Tuesday. I think that's Tuesday. Netflix is next week. Let's see some of these semi plays. Let's see. Nvidia, 4% green day. Not bad. I just started buying Nvidia, guys, full disclosure. I mentioned that, I think last week I started buying it at about 120, 121. It got down to 108. I didn't buy any more there. That was this morning. But if it's able to get under 100 at some point, whether it's next week, a couple weeks from now, that's where I'm going to be buying my next batch of shares. And I'm easing into this one very slowly. I'm not rushing and trying to build the position in a month. It'd be nice to build it out slowly, heading into the end of this year and, going into the new year. But we'll see. The market might have different plans for me. I mean, this thing might rip straight to the 150s now for all we know. And I'm not going to be able to really build it out if it's going up. I don't want to average up on Nvidia. I want to average down, right? And get an average cost of under $100. That would be ideal here. So Nvidia went up today. Very nice day. What else did we see? Intel went up 4% on the day. This is at right around $26 a share. And this stock, I mean, you guys probably know if you've been watching Intel, it has been getting destroyed. It's down 50% since just the beginning of April. That is 6 months ago. So the stock's cut in half in 6 months. That's got to be one of the worst 6 months for Intel ever. I mean, I don't know if that's a fact. I mean, I'm just talking out loud here, guys, thinking out loud. But it's got to be one of the worst 6-month periods, 50% drop. That is freaking brutal. And last I checked, they're still paying a pretty good dividend. Let me see if I could pull it up. And I do have some Intel, guys. I do have a little bit of Intel, nothing crazy. And from my understanding, they didn't cut their dividend. So, but I'm going to double check because I haven't really looked much into this in a while. I've just had the shares, and they've just been sitting in the portfolio. So let's see, Intel, yeah, they still pay, pretty hefty dividend. Again, I mean, I didn't see any news of them cutting the dividend. It's 6%, almost 6%. Currently, it's at 5.76%, and their PE ratio, guys, trailing 12 months, is 5.6. That is unreal. The market cap now is at $108 billion. So let's see on the max chart here, where's Intel looking at? I mean, this is crazy. Look. This stock was $75 in 2000. You guys probably know that. And it got all the way down to $11 in 2008. And you can see that here on this chart. So at this point, guys, we're at levels that we haven't been at since, let's see, 2013, 14. I mean, holy crap. That's almost a decade. Intel's almost at a decade low right now. So I'm not telling you what to do. I'm not telling you what to buy. It could be a value trap for sure, but Intel might be one that is worth looking deeper into, at least. I mean, you don't want to I wouldn't just write it off completely. I'd look deeper into it. Again, I, full disclosure, own some shares, nothing crazy, but I do own some shares, and I'm holding onto them for the long term. We'll see what happens. I mean, if they go bankrupt, it won't be that big of a deal because it's not like Google, which Google's my biggest individual stock holding. I'd be screwed if Google, well, I don't want to say I'd be screwed completely. I mean, I'd recover from it long term, but, it would sting heavily if Google went out of business. But if Intel went out of business, it wouldn't be that big of a deal, at least for me. But if you guys have a big position, I mean, I don't want them to go out of business because that would suck, obviously. But overall, 6% dividend, 5P ratio. The company's pretty much been chewed up, spit out into the trash, and usually that's when you want to look deeper into companies. That's just the reality of the matter. So let's see what else is moving here. What did AMD do? Let's see here. AMD is pretty much where it's been at, high 50s, mid-high 50s. Nothing much really has changed here. It went up 2% barely on the day, still in a downtrend very clearly on the 4-hour chart. Nothing much really has changed, but we do have earnings coming up on AMD on the 1st of November. I think Intel is, when was that? I forgot. I didn't look. Let's see. 27th of this month, so about 2 weeks from now. We have NVIDIA also. Let's see. NVIDIA already reported. That's right. What else do we have? AMAT, Applied Materials, they already reported. AMC barely did well today, but overall, let's see, what else do we have? Microsoft, big day. Let's see how big tech did today. Microsoft had a 4% green day, very sharp snapback from where it was earlier in the day. It was at 218 in the pre-market, hit 236 at the high of the day, which is nuts. That's an 8% move there, which is crazy just think about how big Microsoft is. Their market cap is, let me pull it up here. Give me a second, guys, and make sure to hit that like button if you haven't done so already, and subscribe and turn on that notification bell. Microsoft is a $1.75 trillion market cap. We're talking billions of dollars. We're shifting today in these markets. Unbelievable. 8% move intraday for Microsoft. Apple probably was close to that, from 133 pre-market to 143. Yup, 8% move for Apple as well. Let's see Alphabet, also known as Google. This was $94 in the pre-market. It hit 99. It hit over 100 at one point as well. That's 5.7%. What else? Meta. Let's pull up Meta. This thing has been just annihilated. I mean, it's just been a disaster. Meta was at 122. 131 is where it closed roughly. That's a 6% move. Amazon, don't forget about Amazon. Let's see what this one did. So what I'm trying to get at is, in these red days, guys, not even red days, but these crazy volatile days, we see crazy fluctuation in these companies. We're talking billions of dollars, sometimes hundreds of billions. I mean, depending on what company you look at. Think about it. I mean, if Apple goes, or if Apple swings, I mean, 10% in a day, we're talking hundreds of billions here. I mean, this stuff is no freaking joke. So Amazon, big tech, all those crushed it today. Big. And funny thing is, Amazon actually closed red, but it had a huge intraday move. So if you were able to catch that on a day trade, you did very, very well. Let's see. Starbucks is, fighting with, what's that level? $90. Let's pull Starbucks up here. $90. If I pull this 4-hour up, is right by, the resistance from the middle, beginning of August, end of July even, you could argue. And this point needs to break. If 90 bucks breaks, 93 could be right around the corner. That's the high from, I've mentioned this before, but that's the high from the middle of September. And as of now, we still have a head and shoulders on Starbucks, but we're under the neckline. We're pretty much right at it. So if we break this neckline at 90 bucks, $90.50, we're going to be seeing a much higher move on Starbucks, no doubt about it. I think it could go towards $100. They have earnings coming up here very soon. Let's see, early November. Yeah, on the 3rd of November is when they're reporting. So keep your eyes on Starbucks. Let's see what else did well today before we wrap the video up, guys. Let's see, Foot Locker, Nike. Those are kind of, they've been pretty boring lately. Foot Locker just straight up consolidating at about 30 to 31, 32 bucks. Let's see if it could break back over 35. These moving averages, which we're not showing any signs of doing that yet, guys, but hey, that could be right around the corner. Let's see. Nike, Nike's doesn't look that, chart doesn't look that good, I'd argue, but it's closing, or it did close above the 50 SMA. I'd give it maybe some more upside if it breaks. Let's say 92 bucks. Let me set my alert there. Markets that were above 92. That was the high from, it looks like, late last week. So yeah, watch out for that on Nike. From there, we might fill the gap to about $100, right by that 180 SMA. Let's see what else. CRM, we haven't looked at that one in a while. Let's see what CRM is up to. And cheers, by the way, guys. Stay hydrated. I need to get a sip of water. Hold up. So, as expected, Salesforce is still on a downtrend. Had a 2% green day today, but let's peel back the layers a bit. 3-year chart, ooh, that does not look good. We're actually, oh my gosh, look at that. We're actually getting close to the COVID lows right now. COVID crash lows on CRM. Those were right around 115. We actually, it looks like we only hit 115. That might have been just one day. That might have been the worst, or obviously it was, at least for CRM, the worst of the crash. It probably kissed 115, ripped back up, and found a bottom at about 130, and right now we're at 145. So we're pretty much at those COVID lows right now. So Salesforce might be one worth looking deeper into, to be honest, and doing a deeper dive into. Maybe I'll make a video on it. Let me know your thoughts in the comments if you want me to do that. And while we're at it, drop any other stocks you want me to talk about. Stocks, tickers, and maybe if it's a popular company, honestly, I'd consider making a dedicated video on whatever stock you want me to talk about. So with that being said, let's wrap the video up. We're probably about 18, 19, 20 minutes in. Not too bad. If you enjoyed it, hit that like button. Again, let me know your thoughts in the comments, stocks, whatever you want me to talk about. And if you haven't joined my Patreon yet and you want to try it out, that's linked down below. And you could also get your 15 stocks from Moomoo and your 12 stocks from Webull. All those links help out the channel. I appreciate you guys. I'll see you in the next video. Peace out.